station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
What's happening, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Nice little reversal for the day here. How about that? Looking at MicroStrategy, up 13.5%. Michael Saylor posted on the app formerly known as Twitter that he has, quote, been invited to the Digital Assets Summit at the White House this Friday, hosted by the president. Of course, we have the State of the Union address. We have tariffs. You got natural gas going up because the Canadians hit us with a counter tariff. It certainly is not a boring time, I would say. Take a look at Coinbase as well. You're up about 4.75%, and that is when I feel like did kind of tank a little too hard. That was when I was looking at kind of consolidating, essentially buying at that kind of lower level. Let's take a look at what else. NewScale knocked it out of the park with some earnings reports. So they're up. That is not what I wanted to see. Man, did we sell off a little bit? Yeah, give me a second. I'll figure out what the ticker for that is. I'm not sure why that's... Anyways, let's move on a little bit. We'll figure out the ticker for NewScale because we have Oklo coming up as well. This is in this SMR realm. You're up 7.76%. Man, I was taking a look at Oklo's balance sheet, and these guys, one, they don't have a product, okay? And they just burn cash. Burn cash. I don't know if that is the spot that you want to be in when you're kind of in this macro environment, right? So anyways, I'm looking to do this. Of course, we were, wanting or discussing potentially buying puts for March for earnings. Those would have been deep in the money if we had done it that day. We did not, and that's okay. But I'm going to take a look to see if we can get, this is what I'm saying. I think the macro environment is still very tight. I think it's going to continue to be that way. It is deteriorating a little bit. You're getting kind of this move up right now, whether that's with the State of the Union address, whatever it might be. You're getting kind of this counter trend balance. We're going to look to see volume. I think the equities, right, that have been selling off, that are really meant to sell off as heavily, they're obviously going to enjoy a bounce like you're seeing with Oklo, but I believe this kind of goes away, right? Again, it's very high risk as well. I think getting, either side while waiting to hear what the State of the Union address is going to be. Let's take a look right now. Man, it is a Tuesday, and you know what that means. That means that we're going to have Basil Chapman on. Basil is the author of the Opening Call newsletter. You go right on the front page, actually. We have it up right now. Strongly recommend checking this out. Of course, he's also the host of the Tiger Technicians Hour on 10 a.m. Eastern Time, right here on TFNN every day the market is open. Get the Opening Call newsletter. I can't stress it enough. It is one fantastic analysis. Anyways, I was talking to someone the other day. They got in. They've been loving it, okay? And so recommend doing that. Again, you get these 90-minute live webinars from Basil. These are subscriber only. The most recent one he did was November 14th. I think it still holds true even after all this volatility. And you get these fantastic long-form videos at the end of the week, kind of going over what happened during the week, what the setups are for next week. It is fantastic. I think there's a ton of value in this newsletter. And I want to say to everyone listening out there that might be just discovering TFNN that we offer a 30-day money-back guarantee for all newsletters if it's your first time purchasing them. So you can do all this risk-free. For whatever reason it doesn't work out for you, we'll give you your money back, but I'm betting that it will. Basil, welcome back to the States.
Thank you, Jacob. How are you?
I'm doing well. Man, you leave for a week and the market just starts collapsing. What's up with that, Basil?
Well, fortunately, we were raising cash and going
right.
short. So we anticipated based on a number of factors. Actually, let me do this very quickly for those who are new to my work. I try to identify the lowest low bar, then count each successively higher peak, alphabetizing them sequentially with an uppercase on the way up, lowercase on the way down. A, B, C, D takes you to the fourth highest peak. It can go even higher to E, F, and G, but in a buy signal that gets upgraded to a buy mode invariably says that the price should go to at least a D, whether it's a 1 minute chart or a monthly chart, doesn't matter. So you can see that in this particular instance, we did go to that peak D from the buy signal we got on the 13th at the low, 13th of January, went to 45,054 on the 31st of December. And what happened was there was a very sharp pullback. On the next rally, what we did is we went short. So we've got a core long position because at this point, I'm still waiting to see if that initial 13th of January low is going to be taken out. But we had an insurance policy, so we're short there, but we also are short the S&P. What I wanted to show you is that there are a number of factors that I look at within the context of looking for lows or highs. Very often what I like to see is a double top or a round number. I'll just give you a clue to what we're looking at here, because the 45,073 weekly high that was made back in December, what we did is we pulled back and then we ran up again and just missed it by 45,054 by less than 20 points. And that became a double top. And what I'd said is I don't see a kind of a huge sell-off with everything coming down at the same time. What I see is a rotational correction. And the rotational correction says that we could remain in a rectangle formation. You can see between these borders here in the Dow, and that's going to be very important. Yes, this is a very nice turnaround from the low today of 42,347. And then I'll go through a couple of things we look at in this particular candle in a moment. But I just wanted to say that within the S&P, let me did I type that in the wrong place? Probably I did. Let me try that again. I
just did that earlier, Basil.
Yeah. So this is a very bullish candle.
Okay.
But we did take out the left side low in the S&P. Now we are short the S&P, but at the same time, we're taking a little bit of profit, and the S&P actually ran all the way to 5732.59. Now, I'll talk about this candle in relation to the same thing with the Dow. We don't know what we kind of know what Trump will focus on today, this evening, but at the same time, the market is saying that one thing at a time could be resolved. So the geopolitical aspect, if anything happens with Zelensky and Trump, so that there's just some kind of amelioration of the tension, then what we might see is that the gold, and we've got a break coming up.
Yeah, Basil.
Gold.
Yeah, please stay right there, Basil. Folks, we'll be right back with Basil Chapman after this break. You don't want to miss this, okay?
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour on at 10 a.m. Eastern Time right here on TFNN. Basil, before we went to the break, we were taking a look at, or about to take a look at gold.
Yes. So what I was saying is I've always thought of gold as it really represents a kind of insurance policy for geopolitical and economic strife.
Yeah.
And people have been wondering why is gold going up and the GDX, the gold miners are not showing it, silver's not showing. That's because gold is independent. And I like to look at different, I call them icons, whether it's the bonds, the dollar, gold. I look at them separately. There was a moment where they used to work in a certain way in sync. One would go up and the other one would go down. It hasn't been that way for a while. So gold, I think, is quite independent. So we'll know if gold trading at 29.29 right now, and we've been long gold for quite a while, still going to keep holding this gold because it still looks strong. If gold starts to take out the low that was made 3 sessions ago at 28.44,
yes,
that would imply that it's going to have a little bit a deeper digestive phase than just a pullback. And so that's what I'm watching. But
and are you looking at a digestive phase as kind of like just sideways consolidation, or are you looking kind
sideways, sideways consolidation? Could even make a slightly lower low, but the 28.21 this is the 14-period moving average in the weekly chart. That's the black line right there. That should hold. And look at the distance between the 9 and the 14 here. This is all very strong. So I'm looking at gold and I'm thinking tariffs, there's a lot going on.
Yes.
And therefore that becomes the insurance. I just wanted to get that out the way. Now, the other thing is this. I need to talk about this candle because we might even close towards the high of the day because there's a lot of anticipation going on here, but it's just one aspect of the market. So wherever we close, we've got this long wick. If for any reason there's by 10:30 during my show tomorrow between 10 and 11 Eastern time, if there is, say, disappointment or there's a further analysis about the speech tonight and the market pulls back and the Dow closes for about I'd say 60 to 90 minutes, goes under 42,730. That's this halfway marker for the wick. That's going to be a problem because we could retest the lows. If, in fact, for 2 out of the next 3 sessions, there's a sharp close above today's high, that's going to be very important. But the technicals, the 9-period moving average is still very weak. The MACD, the moving average is very weak. Relative strength, stochastics only at 22%. So it's going to it's going to be a lot of optimism that really gets the Dow back into the 43,000, say 500s.
Yes.
So that's what I'd be looking at. That's just on a very short term. But most importantly, what we're looking at is the overall picture. If you're looking at the monthly charts of the Dow, this is still a very strong chart. If you're looking at the S&P, the same thing. I wanted to bring up one chart. I showed it this morning. So I've been looking for a long time at the S&P 500, and I want to see the IWM Russell 2000 really start to come on strong, and it hasn't done that. We were long from the very low, and we've now taken profits. We're out of that position. We'll have to restart it, and that relationship was the same as the XLF, which is the S&P Money Center Banks.
Yes.
The XLF, and the KRE, which is the regional banks, and they've been very, very weak. So there's a lot of work to be done to get the overall market to rally, as opposed to just sudden big spikes in a couple of stocks that really help. But this is the chart I wanted to show you on a monthly basis. This is not right for the moment, but it's something I'm watching very closely. Mm-hmm. If you look at this, you see the way this pink line, every time it got to a high, it pulled back together with the blue line. Every time it made a low, the blue and pink lines moved up sharply. Once it made a top, the pink line made a top, it kind of stalled the blue line. And then eventually when they came down together and they went up together. Well, what is this? The pink is this is a bar chart, not a candle chart, a bar chart, a monthly chart of the XLF, which is pink, and the blue is the S&P. And look at this pattern. Look at this. I mean, look at the synchronicity here.
Yeah.
So, I'm watching it very closely, because now for the first month we've got a pullback here in the monthly chart of the S&P. Month has only just started, so it's got a long way to go. But you've got a pullback from a high in this month, the month of March, in the XLF, and it's starting to pull back. So looking out longer term, you can see why I still say I'm still longer term very bullish, even intermediate term very bullish. Shorter term, we'll see what happens. Yeah, we've been negative, but I might have to change that in the next day or two. But this is a chart that I'll be focusing on in 2025, because if the pink line starts to go back up to new highs, there's a good chance the S&P, the blue line, will follow. So this is something that's very important. And as you can see, look at the synchronicity at the top right there. This is not quite the same thing yet, but I'm watching it very closely. And look at that beautiful bottom. They both made lows together. So that's something that I'm watching. So within the context of the overall market, the SMHs, of course, very, very important. So the semiconductors went underneath very important support. This is a weekly chart right in the middle here. So as it stands right now, it's still under this green rectangle formation. The very large one has 220.49 as a low from August of last year, but this one was around about the 230 level. So the SMHs have not broken down, but they're not really showing leadership. And I like to think of the semiconductors that these are the chips. This is the oil sector of the 1900s and the 2000s. Everything had oil. Well, not everything, but just about everything had oil. Now everything has a chip. So this is really important. And I would like to see by May or June that the semiconductors actually, instead of breaking under the 220 level, have started to move up towards 270, then 280, then try to test the all-time high. That's going to be the challenge. So overall, short term, I think we've had a very strong pullback, but the technicals are starting to improve with today's action. We'll see if there's follow through tomorrow on whatever's said tonight, but it's all a work in progress. So I don't think any one statement is going to make a change in the market. I think there's a digestive phase that is continuing. I wouldn't be surprised if we start to see some testing, even if we have a good rally, that we still come back and we still do testing towards the lows. So I'm anticipating that this is a work in progress, and that slowly, one by one, I need to see the regional banks start to move, the IWM start to move. I want those sectors to really improve, because that's important to the overall strength of the market. And that, of course, includes the Van Eck Semiconductor ETF, the SMHs.
Sure. And, I want to go back on something with the gold, right? I mean, this is fantastic, and I'm with you on this. The prevailing theory, and I've never focused on gold too much, right? prevailing theory that you're seeing is that they're waiting for the spot contract or the spot price of the contract to really situate at a certain level, and then these miners can start enjoying higher profits, right? And they start mining more. Are you seeing anything in the mining sector itself that would indicate that you might see a hot year for them, or is this really just completely divorced and it has been for a while?
Well, the whole thing, for instance, I'm showing you ASA, which is a South African gold mining. It's like an ETF. They have about 5 or 6 gold shares in there. And look how this is working. The 25.48 high of August of 2020, we went above that and we're pulling back. So I think it's stock by stock. It's not sector per se.
Sure. Basil, I wish we could have you on longer, but we're going to see you tomorrow at 10 a.m. Okay, Basil?
Thank you very much, Jacob. Have a great evening.
Take care. Folks, stay right there. We have Tim Ord up next.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Man, we got some news. I guess Zelensky and Trump will be signing that mineral deal. That's very interesting. Probably the best course of action. We have the State of the Union address tonight. Part of me wishes that were a little bit earlier. We could stream it in the den, but I'm going to not do that. We have the SPY almost flipped green for a moment there. You're off about 0.22%. So taking back some of those losses at 582.52. And the composite up about 0.76% at 18,488, with the Dow Jones Industrial off about 0.72%. The dollar taking a dive right now, off about 0.84%. One of the things I want you to notice about the SPY is where we touched today, right? I mean, this is almost perfectly hitting a certain pullback target that we've been discussing with Tim Ord of the Ord Oracle. And of course, it is a Tuesday, so that means we are joined by the man himself. If I didn't know any better, I think he'd be manipulating the market. Of course, he's not. He's just a fantastic technician. Strongly recommend checking out his website at ord-oracle.com. You can check out his book. You can check out his newsletter there. You can contact him. Additionally, you go over to TFNN.com and we flip over to the services tab. We have 2 fantastic webinars from Tim Ord. That is the 6 secret ratios every trader should know, and the secret science of market tops. We've had a few people getting these. They've been loving it. I recommend checking it out. Send me an email. We'll get you all taken care of. Tim, how are you doing?
Good. A lot have actually kind of gone on this actually for the last since last Tuesday. But let's go. Let's look at some charts. See where we are. The chart here is the American Association of Individual Investors Bull-Bear Ratio. And this chart goes back to 2017. It goes back to 2000, or actually 2007. You can't see it right here, but we're actually 0.32 right now. And anything below 0.4, those are all the red lines across the chart. So I kind of made them visible because you get too small, it gets kind of messy.
Right.
But even off the 2008 high, this indicator did actually pick out short-term lows. Sometimes they were intermediate term, sometimes they're even actually longer term. But we just hit one today, 0.42 or 0.32. Again, it needs to get below 0.40. So this is actually triggering a buy signal. So
how about that?
Yeah. So anyhow, we're going to actually go through several different indicators here.
Yes. Yep.
This is his WAG breadth thrust indicator. Where's my when I made this chart, we're at 0.41. The rules have to go from 0.40 to 0.60.
Okay.
And is a 0.41 close enough? I think it is.
I'd call it.
Yeah, it's we hit it today. So anyhow, this WAG breadth thrust indicator is advancing issues over total issues. You take a 10-day average, and to initiate this indicator, you preferably like to get it below 0.40 or 0.4 or lower. We hit 0.41 today, and then from there it has to go to 0.6 within 10 days. So what this, and actually the previous one was triggered back in January, right here, and it went from 0.41 to 0.61. It took it 6 days. So to me, that's close enough. Then we came back down to, but once you get them, normally it's a support area. And that's the reason why I got this line drawn across here.
Right.
These are previous ones. This was 2002 bottom. It all came in pretty much the same area. We had 1, 2, 3 of them, all within the same area. So we triggered one today, but to trigger it, you have to go now to 0.61 or 0.60 within the next 10 days, which is actually 2 weeks. So what this says is this next rally out of this hole, I'm calling it, has to get to 0.6. If it does, we're still in a bull market, and we'll probably start hitting higher highs. I think this year will be a more of a sideways pattern, but if this swag breast thrust indicator clicks another one in the same vicinity, we're building a huge base for basically a decent rally.
Right.
So we'll see if that happens or not. Don't know for sure, but over the next 2 weeks, if we're up 0.6 on this indicator, to me, we're building a big base for a rally probably year end.
Okay.
So, but anyhow, I still worst case scenario, this market's at worst case is sideways. I thought we already hit the lows of the year, and we just tested them today. But we'll get that in a moment. So here's some other indicators. This is a weekly SPX, the middle window here. The bottom window is just the VIX. Next window up is the SPX VIX ratio. When things get stretched too far, it acts like a rubber band. I use a lot of different indicators for that. I use the trend. I use the VIX. It can be stretched too far. So how far is stretched too far? Well, if you put a Bollinger Band on it, the norm is the mid-Bollinger Band. Anything stretched above that too far or below it too far is when things should reverse. And so I got the VIX on the bottom window, and it hit the upper Bollinger Band today, and the SPX VIX ratio hit the lower Bollinger Band. And previous times I've done this chart goes back to mid-2021. I marked all those times when that happens, and they all came at lows. There's it measures basically panic. Yeah. In a way, it's gone too far in one direction. You can actually do it at tops too. I had some other lines on here, but the market gets so messy that I took those off. So this is all the times when the VIX hit the upper Bollinger Band and the SPX VIX ratio hit the lower Bollinger Band. So we're probably here's another indicator that is stretched too far, saying we're probably at a low. So as you know, we got long last Tuesday, actually too quick. But so I'm going along and said, okay, am I wrong on this trade or am I right? So these indicators I'm showing is probably you're at a low, and we're still making a bottom in this vicinity. So here, I don't know if we got enough time to get through this chart or not. We're about ready to hit a...
Oh, yeah, we have about 8 seconds to break. Definitely stay there. And again, I want to tell people, you're talking about the SPX tilt. Like, if you guys aren't familiar with this but love Tim's analysis, I mean, again, I really recommend the 6 secret ratios every trader should know. Tim, please stay right there, folks. We'll be right back with Tim Ord right after this very short break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Still, we are joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we went to the break, we're looking at the SPX tilt ratio and the daily SPX.
Right. So, the bottom window is the daily SPX. Next window up is the SPX tilt ratio. So this is a ratio between the equity market and the bond market. Kind of the same thing. I think if one goes up faster or down faster than the other, the ratio gets out of whack. So I use an RSI on this. And actually, this ratio, RSI, got below 30 last week. And some reason why I actually got long is usually doesn't get to stretch this much. We're at 21 right now. I think below 30 has been bullish. So what it does say, you don't want to chase the decline here because the SPX tilt ratio is way out of whack right now. So at some point we're going to spring back, and because it's going to be starting today, that's a possibility. I'm thinking this probably turn around Tuesday, be my guess. But anyhow, list of the times. The blue lines here are the times when the RSI got above 70. The red lines are when it got below 30, and we're actually below 30 right now, 21. So this is suggesting that we're going into some sort of low, and we're testing basically the January low there. We're pretty much at that low. We touched it today. So this ratio is kind of extreme. So let's look on the short-term basis what's going on. Yesterday we had a trend of 1.54 and a tick of 1.42 right here. Last Tuesday we had kind of a similar readings, trend 1.71, ticks 265. That's usually a bullish combination, suggesting a low will happen the same day as 2 days later, which would have been Thursday of last week. This was Friday. And Monday, we got another reading. You very seldom get two in a row like this, but you always believe the second one. So when I made this, this, did the first one fail? I don't know. Since you had Friday such a big rally up, not sure what all that is. It could be the tariffs just snoozing the market. The whole thing should turn out to be a low here because we kept getting panic in the ticks and trend. When I made this chart earlier in the day today, we're 100% below the lower Bollinger Band. Okay. To get the whole trading range below the lower Bollinger Band is real rare. And at the times that happen, it usually has been really a decent buy signal. And same with the VIX. You had the VIX 100% above the upper Bollinger Band. Okay. And that's really rare too. So can this rarity keep going? It's all percentages. Percentages says no, you can't keep having that. There's always anomaly along the way, but if you're if you're a bet man, I guess you'd bet this would be a low. So that's what I'm still long from last Tuesday. I don't see actually a big problem. If we didn't have the trend and tick panic readings on yesterday's close, I've been wondering that was a failure back last Tuesday, since we did have another trend and tick reading, another more panic, and panic is actually like gasoline for a market. Adds fuel to it. I still think we're going to, at a minimum, probably go back and test the previous highs of February. But I'm thinking, since we're getting a lot more panic in here, I think we got enough energy actually to break above that high and actually keep going. So that may change, but that's how my view is right now. So I still think we're at a low here, and I think we'll, at a minimum, go back up to the top of the trading range, and I think there's a good chance we break through the top of that trading range. So
I would also say as well, how dependent is this going to be on volume as well, right? I mean, if we traverse back up to that higher trading range, and this is on no volume, right? I mean, one of my kind of operating theories right now is that this is a relatively weak market, and no doubt, I mean, we've spoken on here before, we see a sideways consolidation, a lot of volatility either way. I mean, let's say, obviously, if we move back up to that gap, right, and we get no volume, pretty sure we come back down from that. But let's say we move up on exceedingly strong volume. Let's say, for whatever reason, State of the Union is great, tariffs go away, and we get these movements back to the upside on top of these, technical pressures with great volume. I mean, I guess there's kind of a reevaluation that takes place there, right?
Right. Yeah. Actually, the Zwag breast thrust indicator is a big key to this thing, because we're if we don't get the Bragg thrust indicator trigger, I guess, over the next 2 weeks,
right?
Then and especially if we just go up on light volume, that kind of it changes the complexion of the whole market. So this next rally, if indeed it does start from here, which I think it will, then if that volume's not with it and the Zwag breast thrust indicator doesn't get triggered, then I think, it could spell some, puts a big damper on the market, I'll put it that way. So the whole thing is how the next rally performs. So we'll be watching that real carefully. You want to go to the gold market?
Definitely, and I know we're running into a break here pretty soon, so please stay for the last segment if you'd like. So.
All right. Keep looking at this, the monthly trends, rule of daily, or the weekly trends, rule of daily trends, so on down. The monthly trends are both well. This is current. Both indicators, which if you've listened to the show, they're the monthly GDX up down volume cumulative. That's the bottom window. The next one up is the cumulative advanced decline. Both of them are well above the mid Bollinger Band. They're on buy signals. Mm-hmm. These are usually multi-year buy signals. The minimum duration between these buy signals is a year and a half. The most is 3 years. And the last one was triggered in March of last year. So they're not showing any really weakness. So it looks promising that the current rally, even though we pulled back a little bit, the bigger trend remains bullish. Short-term trend, this is kind of a trending indicator I kind of developed over the years. The bottom window seems to work the best, and what it is GDX up-down volume with a 50-day average. As long as this indicator stays above zero, the uptrend's intact. And I mark those with blue areas. This chart goes back to mid-2018. And we've been in a blue area since it looks like about March probably of last year. Right. Or actually, we've been in blue probably March. Got above blue area. It's still in the blue area right now. It's actually still going up, even though GDX has pulled back modestly. Uptrend is intact, and how high is high, I don't know. I think if you look at the top window there, get my red dot going here. This line right here, that blue dotted line going across the chart at around 43. We're going to attack that, and probably we're going to push through it. So I think it's going to be kind of explosive, because that trend line, the longer that trend line, it takes more energy to get through it. And so energy means more energy. It'll be a pretty dramatic move through that trend line.
Well, Tim, I know we have one chart left. If you want to stick around for the last segment, that'd be fantastic. Okay,
All right, we'll do.
Folks, stay right there. We'll be right back for a short segment with Tim Ord right after this short break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup, Tom O'Brien Show. We're joined right now by Tim Ord. We have one last chart to look for regarding gold. What do we got going on, Tim?
All right, this chart is the inflation-deflation ratio.
Okay.
And I put an RSI on that. When it gets above 70, like here and here, you're at short-term highs, like here and here and here. Then when it gets down below 30, which we're 30.66, you're usually at a low. I should probably put those lines in, but the RSI of the inflation-deflation ratio 30, so it predicts basically you're at some sort of a low in this vicinity. And this low came right at, I had a trend line drawn here. This is the daily GDX. I have a trend line drawn back from the previous highs. Usually around the 39 area should be support. And it kind of hit it stopped it. Now we got the RSI of this inflation-deflation ratio, kind of adds to the likelihood that probably 39 range is going to be support. So we should start seeing a rally, I think, from this vicinity. So anyhow, short term looks pretty good. The trend following indicator is well above zero, suggesting we're in an uptrend. So can we go up, come back down again? Possibly, but we're building cause to bust through this line right here, that 40. Trying to draw here, this 43 area, that trend line. So that's what's coming. So it's going to be pretty dramatic, pretty good. A lot of gold stocks should do well.
Fantastic. Well, Tim, thank you so much. We're looking forward to hearing from you on Thursday, okay?
All right, sounds good. Thank you.
Folks, thank you so much for joining me today. We'll be joined tomorrow morning, 9 a.m. by Tommy O'Brien for the morning market kickoff. It is going to shape up, it is shaping up to be an interesting day. No doubt. You got some major sell-off in the SPX right now at the end of the day, folks. Take care.